Your neighbor drives an $80,000 truck, makes $45,000 a year. Do the math, that's impossible. But there he is, chrome gleaming, leather seats, while you're wondering how you can't afford rent. Here's the truth they don't want you to know. He's not affording it, he's drowning in it. And the banks that sold him that loan, they're counting on it. I'm Max. I expose financial systems designed to keep you poor. And today I'm showing you the automotive debt trap that's destroying the American middle class. A $1.6 trillion industry built on one simple principle: keep them paying forever. By minute 12, you'll know exactly which banks are making billions while your coworkers eat ramen to afford their truck payment. By minute 18, you'll understand why this system cannot be fixed without collapsing the entire auto industry. Subscribe now. This gets darker, and you need to see all of it. Wait until you hear about the 84-month loan scam. Banks literally doubled the length of car loans in 15 years. Not because cars got better, because they figured out how to extract more money from you while making you thank them for it. Stay with me. Chapter 1. The numbers that expose the theft. Let's start with a number so insane you'll think I'm lying. The average new car payment in America, $739 per month. Not for a Porsche, not for a Tesla, for a regular car bought by regular people. Trucks and SUVs, $900 to $1,200 monthly. Some people are paying $1,500. That's $18,000 per year, just for the payment, before insurance, before gas, before the inevitable $1,200 brake job. Now here's the question nobody asks. The median household income in America is $75,000. Household. That means two people working. How can they afford a $1,000 monthly car payment? They can't. But there's a whole industry that makes them think they can. Your grandfather bought a car in 1975. He paid 1.5 times his annual salary. 3-year loan, done, owned it. You want to buy a truck in 2024? That's 1.8 times your annual salary. But here's the trap. You're not getting a 3-year loan. You're getting a 7-year loan. Some poor souls are signing 10-year loans right now. A decade for a car. Let me repeat that because it's so absurd. People are signing 10-year loans for vehicles that'll be worth 20% of their purchase price in 10 years. Here's how they trap you. That $60,000 truck, 4-year loan, your payment is $1,400 monthly. Terrifying. You walk away. But spread it over 8 years, now it's $900 monthly. Manageable, right? Wrong. 4-year loan total, $67,200. 8-year loan total, $86,400. You just paid an extra $19,200 for the privilege of affordable monthly payments. That's not financing. That's robbery with a smile and a handshake. And here's the beautiful part. For them, by year 5 of that 8-year loan, your truck is worth maybe $25,000. But you still owe $35,000. You're underwater, negative equity. You can't sell it, you can't trade it, you can't escape. You're financially handcuffed to a depreciating asset. And that's exactly where they want you. Think that's bad? Chapter 2 reveals how they turned your desperation into a $1.6 trillion profit machine. And I'm naming names. Chapter 2, the villains. Who's stealing from you? Let's talk about who's getting rich while you eat cereal for dinner to afford your truck payment. Villain number 1, the auto lenders. Ally Financial, 2023 revenue, $8.1 billion. Not million, billion. Santander Consumer USA. They specialize in subprime auto loans. Translation, they target people with bad credit and charge them 12% to 18% interest. 2023 profit, $1.2 billion. GM Financial, owned by General Motors. Let that sink in. The company selling you the car also finances the loan. Conflict of interest? They made $2.8 billion in 2023. These aren't banks helping you afford transportation. These are wealth extraction machines disguised as financial services. The mechanism, how they screw you. Here's how it works. Step 1. The 0% illusion. You see those giant banners? 0% APR financing. Sounds amazing. Free money, right? Wrong. That 0% is baked into the vehicle price. You're either paying full sticker price with 0% financing or getting a $5,000 discount with 6% interest. Never both. And here's the kicker. Those 0% offers come with strict requirements. Perfect credit, 20% down payment, shorter loan terms. The people who qualify? They're wealthy enough to pay cash anyway. For everyone else, people with average credit, average income, interest rates are 6% to 10%. Some subprime loans hit 18%. Do the math. Show the theft $60,000 truck, 7-year loan, 8% interest. You'll pay $11,000 in pure interest. That's $11,000 going straight into Ally Financial's pockets for doing nothing except letting you borrow money. That's your vacation fund, your kid's college fund, your retirement, gone. Villain number 2, the dealerships. Dealerships don't make most of their money selling cars anymore. They make it on financing kickbacks and service contracts. When you finance through the dealership, they get a cut, usually 1% to 3% of the loan amount. On a $60,000 loan, that's $600 to $1,800 in pure profit for them, just for connecting you to a lender. And those extended warranties they push, 50% to 70% pure profit margin. You're paying $3,000 for coverage that costs them $900. Villain number 3, the cycle that never ends. Here's the most predatory part. You buy a new truck, 7-year loan. After 3 years, you want something newer. You still owe $35,000. The truck is worth $28,000. You're $7,000 underwater. What does the dealership do? They roll that negative equity into your new loan. You're now financing the new $65,000 truck plus the $7,000 from your old truck you don't even own anymore. Your new loan, $72,000 for a $65,000 truck. You're paying for a vehicle you don't own anymore, and your debt grew even though you've been making payments for 3 years. This is the hamster wheel. The faster you run, the further behind you get. The industry loves this. Dealers call these people serial refinancers. Industry term, they love them. Because once you're trapped in negative equity, you become a captive customer for life. You can't escape without writing a massive check, and most people don't have it. Scale of the theft. Total outstanding auto loan debt in America, $1.6 trillion. Let me put that in perspective. Student loan debt, $1.7 trillion. Credit card debt, $1.1 trillion. Auto loans are the second largest consumer debt category in America. And unlike student loans, which at least theoretically increase earning potential, car loans are for depreciating assets. You're borrowing massive amounts of money for things that lose value every single day. This is wealth destruction at industrial scale. You think this is just bad financial decisions? Chapter 3 destroys that lie. I'm showing you the psychological warfare they use to make you defend your own financial destruction. Chapter 3, the psychology, how they make you complicit. Here's where it gets dark. The auto industry doesn't sell cars anymore. They sell identity. The manipulation. That commercial with the rugged truck climbing mountains, they're not selling transportation. They're selling the fantasy that you're the type of person who climbs mountains, even though the closest you get to off-roading is parking on grass at a county fair. But it works. Because in America, your vehicle isn't just how you get to work. It's a statement about who you are. Successful, hardworking, capable, masculine, adventurous. And if you're driving a 10-year-old sedan, what does that say about you? This is why people get defensive when you question their truck payment. You're not attacking their financial decision, you're attacking their identity, their self-worth. I call it automotive Stockholm syndrome. You become emotionally attached to your financial captor. The truck that's destroying your wealth becomes the symbol of your success. The normalization. Here's the crazy part. If someone told you they spend $1,200 monthly on coffee, you'd stage an intervention. Clothes? That's a shopping addiction. But a $1,200 car payment? We just nod and say, well, you need reliable transportation. This normalization didn't happen by accident. It's decades of marketing convincing Americans that vehicles are extensions of identity. And once that identity is tied to the vehicle, rational analysis becomes impossible. The sacrifices. So how are people actually affording these payments? They're not. They're restructuring their entire lives around their car payment. Real examples. Moving to smaller, cheaper apartments to afford the truck payment. Eating ramen for lunch while driving a $60,000 vehicle. Skipping vacations. Avoiding restaurants. Putting off medical care. Taking second jobs specifically to cover vehicle expenses. Some people drive for Uber using their expensive truck to generate the income to pay for that same truck. That's not employment. That's automotive indentured servitude. Your car becomes both your master and your means of survival. The retirement theft. Others are dipping into 401ks for down payments, borrowing from their future selves to fund current transportation fantasies. Here's what they don't calculate. A $10,000 early withdrawal from your 401k loses $3,000 to taxes and penalties immediately. Would have grown to $46,000 over 20 years at 8% returns. You just sacrificed $46,000 in retirement wealth for a down payment on a truck that'll be worth $15,000 in 7 years. The multi-vehicle trap. But wait, it gets worse. The average American household now owns more cars than licensed drivers. Dad's work truck, mom's SUV for the kids, third vehicle for the teenager. Combined payments, $2,000 to $3,000 monthly. That's more than most people pay for housing. These families have created personal auto financing companies. Except instead of making money, they hemorrhage it monthly. The true cost. Let's calculate what people never calculate. $55,000 truck, 7-year loan, 6% interest, monthly payment, $800. Total paid over 7 years, $67,200. Add insurance, $250 per month, $21,000. Fuel, $350 per month, $29,400. Maintenance repairs, $15,000 minimum. Total, $132,600 spent. At the end of 7 years, that truck is worth maybe $15,000. You paid $132,600 for a $15,000 truck. The opportunity cost. Now here's the part that should make you physically ill. If you took that $800 monthly payment and invested it in a simple index fund earning 8% annually, after 7 years, $87,000. You'd have $87,000 in wealth. Instead, you have a depreciating truck worth $15,000 and no savings. That's a $72,000 difference. This isn't transportation financing. This is wealth destruction with cup holders and heated seats. You think the dealership is the villain? Chapter 4 reveals who really designed this system and why politicians can't fix it even if they wanted to. Chapter 4. Why this can't be fixed. The systemic trap. Here's the truth nobody wants to hear. This system cannot be fixed without crashing the entire auto industry, and the government knows it. The dependency. The auto industry accounts for 3% of U.S. GDP, directly employs 1.7 million people, indirectly supports 8 million jobs. But here's the real number. If we return to sane lending practices, 3-year loans, 20% down payments, debt-to-income limits, 70% of current car buyers would be disqualified. 70%. Auto sales would collapse. Manufacturing would collapse. Dealerships would close. Lenders would lose billions. The political paralysis. Politicians can't fix this because 1. Campaign contributions. Auto manufacturers and lenders donate $100+ million annually to political campaigns. 2. Union votes. UAW, United Auto Workers, represents 400,000 workers. They vote. Politicians listen. 3. Economic hostage situation. Any politician who crashes auto sales gets blamed for job losses and recession, so nothing changes. The regulation that failed. After 2008, Congress passed Dodd-Frank to prevent predatory lending. It focused on mortgages. Auto loans? Barely touched. Why? Because the auto lobby convinced Congress that vehicles are necessary, unlike homes, which are apparently optional. So while mortgage lending got regulated, auto lending became the Wild West. No income verification required for many loans. Debt-to-income ratios ignored. Subprime borrowers approved at predatory rates. The repossession industry. Here's how sustainable this system is. 2.23 million vehicles were repossessed in 2023. 2.23 million. That's 6,100 repossessions per day. And you know what happens when they repossess your truck? They sell it at auction for 30% to 50% of what you owe. Then they come after you for the difference. You lose the truck and still owe $15,000. The subprime scam. Companies like Santander specialize in subprime auto loans. They know these borrowers will likely default, but here's why they don't care. They charge 15% to 18% interest. They collect payments for 2 to 3 years. Then they repossess the vehicle, sell it, and sue for the deficiency. They make money on the interest. They reclaim the asset. They collect the deficiency. 3 revenue streams from your failure. This isn't lending. This is predatory wealth extraction. Who benefits? Follow the money. Let's name names. Michael J. Carpenter, CEO of Ally Financial. 2023 compensation, $15.7 million. For running a company that traps working-class Americans in automotive debt. Tim Russi, CEO of Santander Consumer USA. 2023 compensation, $12.3 million. For specializing in predatory subprime loans. These men are making millions by engineering the financial destruction of the American middle class. The government's role. The Federal Reserve keeps interest rates as a tool to manage the economy. But here's what they don't tell you. When they raise rates to fight inflation, your car payment goes up if you have a variable rate loan. When they lower rates to stimulate the economy, dealerships use it to push longer loan terms. You lose either way. The Fed isn't managing the economy, it's managing wealth transfer from the working class to the asset-owning class. The consumer protection lie. The Consumer Financial Protection Bureau, CFPB, is supposed to protect you. Their auto lending enforcement budget in 2023, $47 million. The auto lending industry's annual profit, $40+ billion. They're out. Chapter 5, Solutions that will never happen. Let me tell you what would fix this. Solution number 1, maximum loan terms. Cap auto loans at 4 years, period. This would force lower vehicle prices. People couldn't afford current prices. Dealers to sell cheaper vehicles. Manufacturers to produce affordable cars again. Why it won't happen? Auto industry would lose 40% of sales overnight. Politicians would be crucified. Solution number 2, mandatory debt-to-income limits. Your car payment cannot exceed 15% of gross income. This would immediately disqualify millions of current buyers and force prices down. Why it won't happen? Same reason: economic collapse of the auto sector. Solution number 3, ban negative equity rollovers. You can't finance a vehicle you don't own anymore. This would break the cycle. No more serial refinancing, no more infinite debt loops. Why it won't happen? Dealers make 30% to 40% of their profit from these transactions. Solution number 4, interest rate caps on auto loans. Maximum 6% interest regardless of credit score. This would protect subprime borrowers from predatory rates. Why it won't happen? Subprime lenders would lose their most profitable segment. They'd stop lending to risky borrowers entirely. Those borrowers would have no access to vehicles. The paradox. Here's the trap. The only solutions that would work would also destroy the system. And destroying the system would eliminate millions of jobs, crash auto manufacturing, trigger a recession, leave low-income buyers with no access to vehicles. The homeowner problem. It's the same paradox as housing. Current homeowners need high home prices. Their wealth depends on it. Current truck owners need the system to continue. If it crashes, their vehicles become worth even less. If you're underwater on a $50,000 truck and the market crashes, suddenly you're underwater on a truck worth $20,000. You can't escape without declaring bankruptcy. So even the victims of this system have an incentive to keep it running. The real solution. Since systemic change won't happen, here's what you can do. 1. Buy used, not new. A 3-year-old vehicle costs 40% to 50% less than new. Same car, let someone else eat the depreciation. 2. Pay cash if possible. If you can't pay cash, you can't afford the vehicle, period. 3. The 20/4/10 rule. 20% down payment minimum, 4-year loan maximum. Total vehicle expenses under 10% of gross income. 4. Buy for transportation, not identity. Your car doesn't define you, your net worth does. The harsh reality. But here's the truth. Most people won't follow this advice because the psychological manipulation is too strong. The social pressure is too intense. The need to look successful overwhelms rational analysis. And that's exactly what the auto industry is counting on. Let me bring this home. That neighbor with the $80,000 truck, the one making $45,000 a year, he's not winning, he's drowning. He's eating ramen to make his payment. He's working a second job on weekends. He's $30,000 underwater and trapped for the next 5 years. But he looks successful. And in America, looking successful is more important than being successful. The game is rigged. Here's how. The banks engineered extended loan terms to make unaffordable vehicles seem manageable. The dealers created the negative equity rollover to keep you trapped in an infinite debt cycle. The manufacturers jacked up prices because they could. Credit made it possible. The government looked the other way because the auto industry is too big to regulate. And you, the person making the payment, you've been conditioned to see this financial destruction as normal, as necessary, as a symbol of success. This system transfers wealth from the working class to corporations at $1.6 trillion scale. You work, you earn, they extract. And the vehicle you're so proud of? It's the mechanism of your own wealth destruction. But here's what they can't take from you: understanding. Now you know how the loans are designed to trap you, who's profiting from your payments, why the system can't be fixed, what you can actually do about it. That knowledge makes you dangerous to them. The next time you see a $70,000 truck in a middle-class neighborhood, don't feel envious. Feel sorry for them, because they're funding someone else's yacht payment with their future. You can look rich, or you can be rich, but you can't do both. Choose wisely. I'm Max. The system is rigged, but you can still play it smart. If you want me to break down which vehicles actually hold value, how to escape negative equity, or expose the insurance scam that's draining another $300 monthly from your paycheck, drop a comment. Tell me what financial trap you want exposed next. Subscribe, because this channel exists to arm you with the truth they don't want you to have. The game is rigged, but only if you keep playing by their rules.